The major indexes kept, kind of moving on, and of course this is earnings season, big week for that.
Yeah, absolutely. Earnings, 1/3 of the companies reported this week, plus lots of corporate deals that are going on in the background. So total corporate transactions are up 36% so far this year.
Yeah, and I think that's just kind of representative of the current environment. Obviously, it's a less regulatory environment in terms of the current administration, and so you're seeing that deal making kind of really increase over the course of the year so far. But again, it does, and this is kind of the theme that we've been talking about so far in the program, is all of this warrants still, to not just put your head in the sand and say, hey, everything's great, my accounts are making money, life's grand, but you really do have to continually check that investment allocation, not just for under concentration of international or over concentration of some of this AI tech stuff, but also basically the balance between stocks versus bonds, because that also has been changing on you.
Yeah, absolutely. I think that's great advice, because let's say previously your allocation is 70-30, meaning 70% stocks, 30% fixed income. With all the growth we've had, you're more in like an 80-20 allocation, so 80% stocks, 20% fixed income. So you're overweight in your equities, which makes your portfolio a little bit more aggressive than you'd want it to be. So it's important that you either speak to your advisor, look at it yourself, and reallocate as necessary.
No, I think that's very, very, very true. So if you've settled on sort of a 70-30 type of allocation to meet your investment goals and objectives and all of that,